Okay, welcome everyone to the Silverado Policy Accelerator report launch called Lithium at a Crossroads. Our team has put together 10 takeaways on the global lithium market, along with some policy recommendations for where we can go from here. I'd love to introduce my two colleagues who were the main authors of this report, Andy David, our Senior Director of Research and Analysis, and Meagan Reid, an economist who works with Silverado. If you don't know us already, Silverado Policy Accelerator is a geopolitical think and do tank. We are focused on addressing pressing policy challenges with novel bipartisan solutions in the areas of great power competition, cybersecurity, trade and industrial security, and what we call EcoSec, which is the intersection of ecological and economic security. Our hope is to accelerate solutions by going deep on the issues that we work on, vetting our policy ideas through our strategic council of experts and our many partners, and then looking for ways to bring broad awareness to the challenges and potential solutions. While there are many critical minerals, each with its own market dynamic, we chose to work on lithium for this report because it is one of the most recognizable minerals, given its centrality to the clean energy transition, whether it's electric vehicles or energy storage. We're going to walk through the key findings of our report and take a few questions and encourage anybody who is participating today to put in a question in the using the chat function. We've also released the report. It's now up on our website, www.silverado.org. We are also going to be releasing a lithium dashboard. And if you want to see updates to that dashboard in real time over the coming months, please sign up for the newsletter on our website so that you can know when those updates are there. We're going to be continuing the research on lithium and other critical minerals and looking at different angles to this. So please stay tuned for further work on this. Without further ado, I'd love to turn it over to Andy and to Meagan to walk us through the report findings.
Thanks, Sarah. So first, just looking at the key takeaways from the report and kind of what conclusions can we draw from recent data released on lithium. First, I think as will not be a surprise to many folks, lithium demand rapidly increased in 2022. Production, which was concentrated in only 4 countries, Australia, Chile, China, and Argentina, also significantly increased, but did not keep pace with demand growth. The shortage of lithium in turn led to a significant increase in lithium prices. Now, there are significant reserves available to meet demand, with the largest concentrations in the Western Hemisphere and Australia. So there are lots of reserves that we can pull from if we can get those mines online and get those minerals out of the ground. China is the largest importer of lithium and also the largest producer of downstream lithium compounds or chemicals such as lithium hydroxide and lithium carbonate. And we'll touch in just a minute on what those terms mean. And then lastly, companies invested billions of dollars in 2022 to expand production of lithium. Okay, so that kind of gives you a sense for the general takeaways from our report. Now we'll delve into a little more detail on those takeaways. But before we do that, we'll go through the approach to the report and some key terminology. First, the approach to the report. We looked at overall trends in the lithium industry and market from recent lithium data releases. That's trade data, production data, market data, things like that. We covered the upstream lithium value chain from mining to compound, in other words, chemical production. So we didn't cover everything. Our focus was kind of seeing what new data had come out over the last few months and what insights we could pull from that data, looking back at 2022 and early 2023, and then looking forward a bit as well. And from that, we drew 10 key takeaways on lithium supply, demand, trade, and investment. As we turn to key terminology, this is just give you an overview of the lithium production process. You don't need to kind of internalize everything in here, but just a few things I want to point out. So currently, commercial lithium comes from 2 main sources. There are other potential sources, but currently it comes mostly from extraction of ore, hard rock mining, or extraction from saline brines. So from ore extraction, you extract the ore, and then you concentrate it to get what's called a spodumene or a lithium concentrate. That concentrate is then converted into lithium hydroxide or lithium carbonate. Those are two of the key compounds or chemicals used in lithium ion batteries. Now, while the concentration is often, but not always, done in proximity to the mine, the conversion to lithium hydroxide and lithium carbonate can be done in different locations. And as we'll see, much of that is currently done in China. The brine extraction, the main product that comes out of there is lithium carbonate. There can also be some lithium chloride, but lithium carbonate is currently the main output. Now that lithium carbonate is converted, that saline brine is converted to lithium carbonate, generally in proximity to where the mine is located. And that carbonate can be used directly in batteries, can be sent somewhere else and upgraded from a technical grade to a battery grade, or can be converted into lithium hydroxide, again, for use in batteries. So again, the key terms to think about are the product from the hard rock mining, that spodumene or that lithium concentrate, and then those downstream chemicals, the lithium hydroxide and the lithium carbonate. So now as we turn to supply and demand, we'll first look at the market in 2022. So as we look at the market, there was a 41% increase in consumption in 2022 over 2021. And we see that consumption more than doubled from 2018 and 2019 levels. Not surprisingly, what drove that increase was the increased demand for lithium-ion batteries for electric vehicles. There are also other drivers, for example, energy storage installations also increased, but EVs were certainly the biggest part of that demand increase. As we look to see how supply responded, you can see that supply responded, increased by about 21% from 2021 to 2022. Now that's starting off a higher base, but still that was not enough to keep pace with demand. So as we turn to the next slide and we look at the supply demand situation, you can see that from 2018 to 2021 in the black, there was a supply surplus. In 2022, that switched to a supply deficit. And as we kind of look to the future, so just bear with me for a second as I take you through this slide. I know there's a lot of different pieces on here. If we look at the blue, that's the median supply forecast in that bar. If we look at the gray, that's the median demand forecast. So we expect demand to continue to increase over time, but there are a lot of supply constraints. So supply is going to struggle to keep up with demand. And, you know, there's a lot of forecasts indicating that in some or all of these years, the market is going to be in deficit. Now, there is considerable uncertainty around these forecasts. So if you look at the dotted line, the blue dotted lines are the supply side, and the black is the demand side. So we see that there are a range of scenarios that could play out over the course of the next 5 years. But in general, the market forecasts are expecting pretty tight supply and demand conditions. So next, let's look at what that tight supply and demand means for pricing. We're going to start here. This is the spot price for lithium. I think it's pretty familiar with what a lot of people have kind of seen other places. And that's the shortage led to a significant increase in demand, a significant increase in prices starting in the second half of 2021, which ramped up into 2022. Prices stayed high and then started falling in very late 2022 into 2023 before rebounding a little bit. But even that much discussed plummet in prices in early 2023, you can see even at its lowest point, it still stayed significantly above 2019 and 2020 prices. So even though there was that huge drop, we're still talking about an elevated price environment. And we've started to see a little bit of rebound over the last week or two, and we'll see how that plays out as we go forward. Next, we're going to look at import prices. So what we see here is the average unit value of global lithium compound imports. And you can see the trend here is a little bit different. We see the increase in prices, but we don't see that coming into play until really until 2022. And then they ramped up, and even in Q1 2023, prices remained elevated. We haven't seen that steep decline that we've seen in the spot prices. So one thing to keep in mind when we're seeing that spot price picture is that is just one pricing mechanism in the market. That's just what's purchased on the spot market, and oftentimes just purchased in the spot market within China. When we kind of look at the unit value of imports, that kind of shows us a little more what's going on with global pricing. And in here, you have the spot prices, you have the contract prices, you have other pricing mechanisms going on here. And those long-term contracts in 2022, they were increasingly shifted to being tied to those price indices. So we will see those kind of play out in these contract prices over time. But certainly there's a lag in that, and they may be tied to multiple different indices, which are changing at different rates. So let's turn to one more pricing slide. This is the average unit value of Australia's lithium concentrate exports from 2021 to 2023. You can see again the increase in prices in 2022 and through 2023. And actually, though there's some monthly variation, the highest unit value of their exports is in March 2023. Now, with Australia's lithium concentrate, there's also some variation in product quality, the percentage of the product that's accounted for by the lithium. But again, we still see a pretty strong pricing environment and what the prices folks are actually paying in early 2023 under some of these contracts. So from here, let's turn to the geography of lithium mine production. And what you can see here is the distribution of lithium resources. Now, there's a few different terms that are thrown out there. There's a term reserves, there's a term resources. So resources, for now, we're looking at right here. These are the deposits, whether or not they're economic to extract. And you can see there's huge concentration of those resources in the Western Hemisphere. Australia is the second largest source. So that's kind of our key takeaway up front, that the Western Hemisphere and Australia will be key for future lithium mine production. And even though Australia looks a little bit smaller here, if we were to look at reserves, which are those resources that are economic to extract, the Western Hemisphere still remains the largest portion, but Australia then becomes about 24% of those resources that are economic to extract. So Australia becomes even more important when we look at it from that perspective. As we turn to the next slide, this shows you lithium mine production in 2022. You can see that, just focusing on 2022 for a minute, Australia was the largest producer, followed by Chile, and then China, and then Argentina. Now, Argentina's share hasn't increased much over time, but and their actual production level hasn't increased much over time. But what we do know about Argentina is that they have the largest project pipeline in the world in terms of number of projects. So we will expect to see a lot more lithium coming out of Argentina as we go forward. And then when we get to the end, maybe we'll talk a little bit about investment in Argentina and what that means and who's investing and things like that. So next, we're going to look at the downstream production of lithium compounds or chemicals. That's that lithium carbonate or lithium hydroxide. So just a couple key takeaways on this. The first being that China is the largest global producer of lithium compounds. You can see here on the left, that's Chinese production of lithium carbonate. There was a substantial increase from about 109,000 metric tons in 2018 to 319,000 in 2022. If we look at on the right, China is the largest producer of lithium hydroxide. And in fact, the most dominant producer of lithium hydroxide, somewhere around 80% of lithium hydroxide is produced within China, or was produced within China in 2022. We do see some more diversification in supply coming online. The US, Australia, South America, other countries in Northeast Asia. But for now and for the foreseeable future, China is the largest producer of lithium hydroxide. And you see that staggering increase from about 42,000 metric tons in 2018 to about 239,000 metric tons in 2022. And finally, on the production side, Chile is the second largest producer of lithium compounds. You can see there was also a substantial increase from 2018 to 2022. Now, this reflects, again, the lithium that production in Latin America comes largely from the lithium brines, or the saline brines, and that generally converted to lithium carbonate on site or in proximity to the lithium mine. There's also some production of lithium hydroxide in Chile, but nowhere near the scale of what's happening within China. So I think that kind of sets up the supply, demand, and production side. So now I'm going to turn it over to Megan to take us through what that really means for on the trade side.
Great, thank you, Andy. First, when going through the trade data, we looked at global exports of lithium concentrates, which, as a reminder, is the lithium mainly produced from hard rock mining. Exports of these lithium concentrates has significantly increased from 2021 to 2022. Australia was the largest exporter of these concentrates, reflecting their role as the primary producer of lithium from hard rock mining. And then most of these imports, a substantial degree of these imports at 96%, then went to China, where they're then produced into more downstream lithium compounds. And so moving on to the global trade data in lithium carbonates, which again can either be produced from lithium concentrates, but mainly is produced from the saline brine extraction. Global exports have doubled from 2018 to 2022. Chile and Argentina are the largest exporters of these lithium carbonates, reflecting their primary role in producing lithium from brine extraction and then converting it to carbonates at or near the site of extraction. So going into the imports of these lithium carbonates, we can see that there's a higher diversification of import sources as compared to lithium concentrates, with the US, South Korea, the EU, and Japan making up 45% of these global imports. Yet China still imports the majority of lithium carbonates at 53%, again reflecting their dominance in the downstream production of lithium compounds, specifically lithium oxides and hydroxides. So then the last lithium product we looked at in terms of the trade data was lithium oxides and hydroxides, which is a more downstream lithium product and can be used as a direct input into some battery manufacturing. And we can see that global exports of these products have substantially increased from 2018, with China's export share almost doubling over this time period, or over doubling, I believe 83% increase over this time period. Now looking at the imports of lithium oxides and hydroxides, Japan and South Korea make up the largest share of these imports, reflecting their own domestic manufacturing or battery manufacturing markets as well. So now we'll look at the global investments of lithium extraction in 2022. Last year, companies invested over billions of dollars into lithium production, with Chinese companies having been some of the leading investors in this area and investing in key developing regions such as Argentina and South Africa. And then while this is occurring, some of the Latin American countries, specifically Bolivia, Mexico, and Chile, are asserting more control over their domestic lithium resources through discussions of nationalization policies. And then with that, I'll turn it over to Sarah, who's going to be discussing the recommendations in this paper.
Fantastic. Thank you so much, Megan and Andy. It's really so incredible to hear the deep dive on this issue. There's so many nuances to just lithium extraction and processing that I think get lost sometimes in some of the higher level conversations. So I do encourage everybody to not only read the report, but read the footnotes, because there's a lot of really good information in there. I also want to just use this opportunity to remind anyone that if you would like to ask a question, please use the chat function, but we are also available to take questions at any time. You can reach us at info@silverado.org. So as we think about the market situation that Megan and Andy have laid out, it's obvious that we need to be thinking long-term about what types of policy measures are needed on both a national and an international level to address what is shaping up to be a sustained supply-demand mismatch. And we need to be able to do this for two primary reasons, although there's many more. The first is we have committed, both the United States as well as many other countries, to a net zero by 2050. This is going to require a clean energy transition, and that is not possible without figuring out ways to ensure that we have enough demand for critical minerals like lithium to support this transition, whether it's through the increase in electric vehicles, energy storage, wind turbines, or other clean energy technologies. The second reason why this is all really important is because right now, as you can see from this report, from these report findings, we have some pretty significant vulnerabilities where there is a single point of failure along the supply chain. We should not be in a position, whether it's China or any other country, to have so much concentration at various stages through the value chain for these minerals that are supporting everything from clean energy to national security, defense needs, medical devices, and otherwise. So as we looked at this issue at Silverado, we put together a list of 4 recommendations, by no means an exclusive list, but these seem to us to be pragmatic recommendations that can be acted on in the short term. So the first is a mapping exercise. What we mean by mapping is an exercise whereby the United States, key allies and partners that are all involved in not only the production and processing portion of this value chain, but who are dependent on others who are involved in those stages, are getting together to take stock of what do we have now? Who's producing? Who's processing? Where is the deposits? Where are the reserves? What is commercially viable? What are the projected demand and supply forecasts, even though we know that those are subject to change? And then what are the policy gaps that are preventing us from closing the daylight between supply and demand as we go forward? A mapping exercise would have to be iterative. It would have to be a living exercise that continues to adapt to changing market conditions, but it could really help to synergize different countries' strengths and to avoid redundancies and to give us a better picture of where to go. The North American leaders agreed to a version of this exercise last year, and I'm hopeful that we will see some results there, and maybe that is something that can scale to include more countries that are part of this value chain. The second recommendation regards permitting reform, and this is something that has been in the news quite a bit lately. I think that there is a real stigma to talking about permitting reform, whether it is for the energy sector or the mining sector. When people are talking about permitting reform, at least from my perspective, what we're not talking about is sacrificing the environmental protections that the permitting is there to protect. We have redundancies that exist and red tape that exists that we could do away with without ever having to sacrifice on those safeguards. And it's something that we need to prioritize and not let politics get in the way. Permitting reform is the only way that we are going to be able to start the process of getting the supply that's needed. And it's not just something that can happen from the United States alone. We have to work with partners on this. Not one, there is no one solution, one country solution here. This is a partnership. The third recommendation that we have is regarding how we do all of this. We don't have to do this through an opaque process of dirty mining with no regard for the environment or for workers. There is an opportunity and a moment to change the narrative on this. And I'd like to commend the US for putting out a strategy on standards for emerging and critical technology, which includes coming up with sustainable standards that take into account safety and ethics and workers' rights when we're talking about the mining sector. And I would note too that in April, the G7 ministers met and came up with a 5-point communique on critical mineral security. And this was one of the areas that they highlighted as well. The last recommendation in our report is to have the US and allies and other countries be investing in the R&D and the technology and the infrastructure that is needed to ensure a sustainable supply over the long term. And this isn't just about extraction. This also is about looking at alternatives to lithium, whether it's a chemical substitute, or looking at how can we recycle what is already there. So, this is really important to mitigating the amount of times that we have to go back to the mine itself. So those were the recommendations that we had. We welcome thoughts and comments on this webinar. As I said, also welcome, our guests reaching out. We will have a recording of this webinar that we will put up on our website and send out the link to everybody who's joined. So with that, I want to thank you, and I'm going to look and see if we have any questions. It appears that we do.
I see one in the Q&A here I can answer, Sarah. Let me
Yeah, that would be great. I'm sorry for technical difficulties, but I can't get that pop-up screen to work.
Okay, no worries. So the question is,
I got it. Here we go. Oh, but please go ahead, Andy.
yeah, would the majority of U.S. reserves be accessed through ore mining or brine extraction, or a mixture of both? Also, what are your general thoughts on the economic potential of California's geothermal brine extraction? So the U.S. has lots of different types of geothermal lots of different types of lithium resources. So we have current production. The big plant that's been in production for many years is Albemarle's plant in Nevada, which is lithium brine extraction. There's some extraction in Utah, some waste tailings that they're using there. But we also have hard rock resources. Albemarle is looking at reopening a hard rock mine in North Carolina, for example. Thacker Pass, which is getting underway with construction, uses actually clay resources. And then, as you mentioned, there's the geothermal brines in California. We haven't really done a good look at the economic assessment of those geothermal brines, but I think goes to Sarah's point that we have a lot of different types of resources in the U.S. We have a lot of different, a lot of types that haven't really been used in the past. So I think investing in new technologies, things like that, are critical for being able to access some of the domestic lithium resources.
I see that there's another question here. Have we identified where the single point of failure is along the supply chain, and what would be the best way to prioritize these efforts? This is a great question. I think you'll see in the report, and as Meagan and Andy have highlighted here, one example is that China is both a leading importer of, and I'm going to oversimplify this, but a leading importer of ores and concentrates, and a leading exporter of the processed version, and in orders of magnitude more than other countries. So we're not seeing, a group of countries each with 10% of the value chain. This is very, very concentrated, especially the downstream pieces of this value chain in particular. And so what this means is we need to be looking at where can we expand to have more diversification, particular in the downstream areas of the processing and refining. It's not something that we are doing a lot of here in the United States. I believe that Canada and Australia are starting to do more. We're thinking about doing some more. Maybe there's a couple of projects underway, but we have a real mismatch there, and we need to be prioritizing how we're going to be creating new sources of supply on those, in that downstream segments of the value chain, so that there are just more sources. I don't know if Meagan or Andy, you want to add to that?
No, the only thing I'll add, Sarah, is encourage people to look at our dashboard in addition to the report, because the dashboard has a statistic in there and a graphic showing that about 80% of lithium goes through China at some point in the production process. So lithium is very complicated. There's a lot of different numbers out there about refining and what does refining mean in lithium and things like that. But about 80% of lithium passes through China at some phase of the value chain, or more than 80%.
Thanks, Andy. So we've got a few more questions here. Seems as though we would want to see aggressive investment in processing capacity in Australia and Argentina so as to alleviate the China bottleneck. I think that this goes to, the question that we were just talking about. We definitely need to see more investment in processing. Maybe it's in Australia, maybe it's in Argentina, it could be elsewhere. But we need to set up the conditions for that. And I don't see them existing at the moment. And part of the reason for the mapping exercise is to really understand and to be able to showcase these choke points, and then to think about who's best in a position to take on some of the new processing capacity that would be needed in order to create a more resilient supply chain. But it's a great question. And part of what we're trying to do today is to raise some awareness that we've got some vulnerabilities here. Another question is on the most likely product substitution opportunities. We didn't include it in this presentation, but we do have a chart that I believe we have on our website from a prior event that Silverado hosted on critical mineral supply chains in the Western Hemisphere. We looked at the periodic table essentially, and not necessarily through our own research, but another group had put together kind of a rating of the various different critical minerals and which are the most likely to be able to have pragmatic substitutes over the short and long term. There's a variety that have viable substitutes, and more research and investment is needed to make that happen at scale. And then there are other minerals where it's really not a possibility and that they have very low levels of substitution. So I'm happy to pull that link out and direct folks to that chart. Andy, do you want to read the next one?
Sure, there seems to be a lot of willingness to overcome politics when the barrier to additional supply is permitting, but very little willingness to discuss the role of protectionist trade policy in inserting inefficiencies in the supply chain. In the end, we know politics will always be a factor in all policy making, but trade policy seems to have become a third rail, so trade policy induced inefficiency is not addressed.
This is a great question as well. I think that one of the ways to try and take some of the politics out of the discussion, which, as you note, is inevitability, is to do a mapping exercise and to really look at the data. And that way we have data-driven policies that can help us to understand where we need to be going, not just in the US, but around the world. One other question I see here. As you brief on your findings, what level of awareness are you finding in the administration that we do not have access to sufficient critical minerals at this point to fulfill the promise of the IRA? Great question. We've not looked at this issue specifically. We've kind of looked more broadly at global demand and supply and where the mismatch is and who's kind of in the driver's seat at the moment in terms of production capacity and processing capacity. I think that we're going to see some changes in that over the coming years as the IRA is implemented and countries start to think about what types of national reforms that they may undertake in order to encourage more production or processing. So it's, I think it's a little early to tell. And we've not looked specifically at that issue, but it is a good question. I think that we may have gotten through all of the questions here. If there's any last questions, please put them in the chat. Hearing none, I just want to say thank you so much to Andy and Megan and to our fantastic intern Yumi, who worked on this report as well and who has gone on to bigger and better things having graduated. You guys have done a fantastic job. Looking forward to seeing how the data continues to evolve. Please check it all out on our website, www.silverado.org, and reach out to us with any other further questions. Thank you all so much for your time.